Hey, everybody, and welcome back. Today is Saturday, March 14th, 2020, and as of market close yesterday, silver had crashed through several floors and settled at $14.79. So, with that spot price, is now a good time to buy? Let's talk about it. All right, and welcome back. So, the virus that originated in Wuhan, China, has sent the global markets into mayhem over the last couple of weeks. Over that course of time, we've witnessed dramatic drops and also increases in valuation of equities, lending rates, and bullion. I'm currently going through the process of refinancing my home, and my broker has informed me that had I started the process now, not only would I be significantly delayed because of the surge of applications, but that the mortgage rates are actually going up in response to the demand. All right, so platinum and silver have definitely led the charge downward, losing about 25% of their total value since the beginning of the year. Silver, however, is not far behind platinum in that. Platinum is leading the charge downward. And today, as mentioned, we are sitting at $14.79. So yesterday, JM Bullion announced a 5 to 10 day processing and shipping time for their orders. They also increased their premiums on many of their silver products, as did many of the other dealers. They also enacted a temporary $299 minimum purchase order. Much of their popular inventory is already sold out. So looking at Texas Precious Metals, they also raised their premiums on American Silver Eagles. They've also practically sold out of them. I do believe they have some 2020s left in inventory, but I'm just not interested in paying a near $5 premium for a silver coin. So they also charge tax on foreign bullion at Texas Precious Metals, also on their rounds and bars. So I won't be buying from TPM until this new premium hike has gone away. So yesterday I did place a quick call to George at All American Gold and Silver, and he revealed he was completely sold out of all silver with the exception of a few 90% quarters and half dollars. Definitely a rush on silver to get in at these prices. I just wonder if now is the bottom. And I say that because it's the weekend. And over the weekend, news occurs. In my opinion, we're going to see a rather dramatic rise in case reporting. We're going to hear about some major closures of universities and schools. I know for one that my children have already been extended 2 weeks. They're on spring break effective Monday. And the school has already announced that they're going to be home an additional week. So how's that going to work for folks that have to get to work, that have to earn a wage, that rely on daycare facilities or other child care facilities to care for their children while they're out earning a living? The impacts are going to be felt for some time. I suspect we'll hear about more fatalities. I suspect we'll hear about some more strict travel bans being put into place by our government and other governments. Simply put, I do not think that this is the bottom. Now, I do know that the Fed injected a ton, and I mean a ton of cash into the market. There's a relief bill coming. That's great. That's all great and well. But you can hand me $1 million, but if I've got 103 fever, it's kind of hard for me to, produce things. So to me, this is not over. We haven't reached the peak. Once we actually establish a peak and we start seeing case numbers come down and travel restrictions lifted and folks going back to work, I suspect that will be the time that we will start to see a rally in the market once the market actually prices in the losses it's expecting due to the lack of labor, the lack of transport, and the general fear that's in the market. So, in my opinion, I don't think this is over. I feel like our bullion dealers are going to be scrambling to try to pick up whatever inventory they can find over the next days and weeks. That prices will stay low, if not lower, and begin to stabilize. Now, how did we get here? So first, let's take a look at how gold and silver have performed during the most recent stock market crashes and or bear markets, which we're in now. So a 20% loss in the overall market from recent highs does constitute a bear market. We're not in a recession yet, at least by economic definitions. We still have to get some quarterly data in. It has to be 2 subsequent quarters in a row for us to be declared of a negative growth, that is. to be declared into a recession. So let's take a look at an image here, and here you can see that during the largest declines in valuation of the S&P 500, gold itself has increased in value 6 of the last 8 times. However, contrary to that, silver has decreased in value 6 of the last 8 times. Let's make that 7 of the last 9 now. So now let's go over some feedback, and this is all from goldsilver.com and how this usually plays out. So let's look at the image here. So does gold go up if a stock plunge occurs? In recent times, the answer has usually been yes. Notice this was regardless of whether the crash was short-lived or stretched out over a couple of years. Gold even climbed in the biggest crash of them all, a 56% decline that lasted 2 full years in the early 2000s during the dot-com bubble. It seems clear that we should not assume gold will fall in a stock market crash. The exact opposite has occurred much more often than not. Now, should investors panic over an initial drop in gold prices? So this is once more from goldsilver.com. You'll recall that gold did fall in the initial shock of the 2008 financial crisis. This recent, a bit memorable instance is perhaps why many investors think gold will drop when the stock market does. But while the S&P 500 continued to decline, gold rebounded and ended the year up 5.5%. Over the total 18-month stock market sell-off, gold rose more than 25%. The lesson here is that even if gold initially declines during a stock market collapse, one should not assume it's down for the count. As a matter of fact, I'm predicting that silver and platinum group metals, as well as the overall equities market, will be down on Monday. That's a prediction. I'll be here to answer to that, whether I'm correct or wrong. In this scenario, though, I do think that gold will start to balance out, and we may actually see a further increase in the gold to silver ratio as gold stabilizes. Perhaps it increases slightly, and silver continues to decline. Once more, it could be wrong, but let's keep reading. So gold's only significant sell-off, 46% in the early 1980s, occurred just after its biggest bull market in modern history. Now, this is something to think about because gold has definitely been in a bull market during an equities bull market, which is a little atypical. So gold rose more than 2,300% from its low in 1970 to the 1980 peak. It isn't terribly surprising that it fell with the broader stock market at that point. In recent years, the situation has been the exact opposite. Gold endured a 45% decline from its 2011 peak to its 2016 low, which was one of its worst bear markets in modern history. At the same time, this isn't entirely a shock either, given its quick gains during the 2008 and 2011 crashes. So now, this is a silver-focused video. So why am I talking about gold? Well, here comes the punchline. Silver did not fare so well during the stock market crashes. In fact, it rose only one time during the S&P sell-offs and was basically flat in another. This is likely due to silver's high industrial use, which we've been talking about here on this channel. 56% of the total silver supply was destined for industry, and that stock market sell-off is usually associated with a poor or deteriorating economy that silver is largely linked to. You'll see that silver fell less than the S&P 500, which it's also done now slightly. This is significant because silver's high volatility would normally cause it to fall even more. Also notice that silver's biggest rise, plus 15% in the 1970s, took place amidst its biggest bull market in history. It also ended flat by the end of the financial crisis in the early 2009 time period, which was its second biggest bull market. Guys, in other words, we have historical precedents that silver could do well in a stock market crash if it already was in a bull market. Otherwise, it will struggle. Well, silver was the opposite of gold. Silver's been in a bear market for some time. We have seen some gradual price increases, but still the same level of volatility. How many times in the last 6 months have we gotten over 18 to settle back in the 16s? And now we're back in the 14s. So based on this article that was written a couple of years back, odds are high that gold won't fall during a stock market crash, and in fact, will likely rise instead. Now, we haven't seen that yet. Then it goes on to say silver might depend on whether it's in a bull market. Well, we already know where silver was at, and we do see how silver is performing, only slightly better than the S&P 500. So what's the difference today? Not much. Silver has sold off from a high in spot price on February 24th of 2020 of 1861. Now, I ran those numbers yesterday myself. Now to a price of $14.79. That's about a 20% decline from its peak in February. Silver has unfortunately proven to be less of a safe haven asset during a correction, crash, or bear market, and is now much more tied to industry than it has been in past crashes. Not only that, around the world, people are selling their bullion and investing back into the market, which has rallied about 3.5% as of that was written on Thursday. Today, or into bonds, or more likely to hold as cash. Now, I've considered this myself. I do have a dividend portfolio that I've got 11 equities. Some of my stocks include Southern Company, Medtronic, Microsoft, TD Bank, General Mills, Coca-Cola. These are all stable, high dividend paying stocks with good balance sheets, and they're now on sale. All right, so coming around full circle, is now a good time to buy? Um, I do think that if you're looking at the long-term forecast, which most of us are, that in general, these are very favorable prices. It's very difficult to predict the bottom. However, I do think that over the weekend, as mentioned, we will receive some more reports which will drive the markets further down when we open on Monday. This is my total opinion here. I don't think that we've seen the peak in cases. I don't think we've seen enough closures of major corporations and other um, activities such as mentioned earlier, colleges and that sort of thing that's going to continue to um, drive negative news in the media that will further fuel um, hysteria over the preparations we should otherwise be making anyways. It's a lot to say, a lot of twist on words there. I do think prices are low. However, I will not be buying at this time. I'm going to continue to watch silver and platinum over the next couple of weeks and obviously see if gold plays out the same way that it's played out in the past, where it initially sells off slightly and then stabilizes and begins to grow. I'd like to thank you all for watching this video today. I'd like to thank you for tuning into this channel. If you like what you saw, please consider subscribing. Definitely pay attention to what's going on out there. There's a lot of different opinions on whether this is serious or not. But when it comes to your health, I'm not sure what more serious we could discuss. So anyways, stay healthy, and we'll talk to you next time, guys.